Hey everyone! We have a lot to cover in today's video. I want to thank all the new subscribers that we've had join the channel recently, and I just wanted to give you guys a full portfolio update to show you guys how I'm doing in the market during these tough times. We're also going to be going over the trivia winners in recent videos. I also have a few stocks I'm going to be talking about, as well as some current events that I wanted to discuss. But first, I was able to reach 2 new 1K milestones since our last portfolio update last month. And since that last update, I've topped both the 27K mark and 28K marks for the first time. So my portfolio was able to reach $28,000 for the first time on May the 8th. As you guys can see here, you can see when I first started investing, it was a little over 2 years ago now, and it's pretty crazy just in a short amount of time, already up to 28K. And what's even more crazy is that just a year ago in May of 2019, it was only at 10K. So I've been able to grow pretty fast, I think, and I'm just gonna continue to keep putting money in and keep investing, and we'll see how far this journey takes me. Okay, let's take a look at our trivia winners since our last update. And here are the standings. So it looks like I'm really bad with names, by the way. So it looks like Frank Mularsik, I think that's how you pronounce it. He actually won 2 contests. We're gonna just call him Frank Mula because that's the first 4 letters in his last name. And Mula is always good. So he was able to correctly answer the questions about where was the 1996 Summer Olympics held, and that would be Atlanta, Georgia. And of course, Georgia was the first state to reopen the state to businesses. And I think that's a step in the right direction. I've been saying this since day one. I think the most dangerous part of the C-19 is not the illness itself, but it's going to be our reaction to it. And I know this is a heavily polarized topic, and honestly, I don't think there is a correct answer to this. So whatever we're thinking, it's just an unfortunate situation. He also got the question correct on what is the symbol for change and how does that relate to Warren Buffett, which is Delta. And Warren Buffett basically sold out of his airline companies, including Delta, a significant amount of them. And Frank was able to beat out other people who took shortcuts by not fully spelling out Delta. Those extra few seconds that he took to type out Delta, life is all about a few inches or seconds, so I had to give the win to him. And then we also had Etan Rolnick, who correctly identified that 70s show in one of my videos. And then in my Data Center REITs video, the question was, who is the CEO that made headlines for saying that his company's stock price was too high? And then Gary was actually the first one to respond, but unless I didn't hear that Nikola Tesla had somehow come out of his grave to be the CEO of one of the 2 companies that bear his name today, the correct answer we're actually looking for here is, of course, Elon Musk. And that was actually first correctly answered by Jason of Flaming Profits. So congrats, guys. Obviously, Elon Musk is always in the news for one reason or the other. You'd think he would learn after his potential stock market manipulation tweet 2 years ago when he said that he might take Tesla private at $420. Yeah, this one was a bit more ambiguous, but we'll see how it goes. It did end up actually costing Tesla in the short run a few $billion in market cap, but it looks like they've slowly recovered as well. So here are the standings, guys, and be sure to watch the videos and see if you can be the first one to answer the question. You will be entered in a chance to win a gift card in a raffle whenever I do get paid from YouTube, which might take quite some time. All right, let's get into the actual portfolio here. And unfortunately, one of the downsides to owning 40 plus stocks is that I can't always keep up to date with everything that's going on with stocks, such as earning calls. We just had earnings season, but if you do invest in great companies, you don't need to be babysitting these companies. And since these are all, for the most part, long-term holds, I wouldn't be selling based off short-term headlines anyway. So let's get into the first stock. We have Apple that recently announced that it had a dividend increase, and the returns on this company are now big enough where I can actually basically buy an iPhone with it, the newer iPhone SE. I mean, I think that's pretty cool that we can actually use the proceeds from Apple stock to buy an Apple product. This is the largest position in my portfolio, makes up about 8% of my portfolio in total. And I'm up pretty big on it, and we'll just continue to be buying more and more shares of Apple. It's a great company. Then we have Procter & Gamble. Just talked about this in my last video, as well as Apple. And I'm also up on this position. Bought it at just the right time, but I only have 3 shares of it, and it doesn't make up too big of a position. It's nice to have a dividend king like Procter & Gamble here, 64 plus straight years of dividend increases. And then this is DHT Holdings. Basically it's an oil tanker stock. This is becoming one of the more popular stocks here on Robinhood. And I just made a video about why I'm buying this. This, unlike most of my positions, is a short-term hold. I'm not going to be holding this for the long term. I just think that there's some opportunity at a quick gain here. I probably bought it maybe a day or two too early. Could have gotten in at a much better price. I do think it'll go back over $10, and that's when I will probably sell out of the position and I can make a quick buck or two. It also just announced that it's giving out 35 cents per a share, which is pretty big for a company like this. But its dividends are also very inconsistent, so there's no rhyme or rhythm to its dividends. So just because it paid out 35 cents this quarter, that doesn't mean that it's going to be paying out 35 cents next quarter. And then we have Visa here for $185 right now. It's trading for. I own 7 shares, and it makes up about 5% of my portfolio. And I've had some pretty solid returns on this company, and it's done phenomenal here in the last 5 years, 180%. So card companies might be hurt in the short term as people aren't spending as much money, but I do expect them to be a strong company going forward. Then we have JP Morgan Chase at $92. I was able to recently buy some shares last Friday. I now have 10 shares, almost $1,000 equity. I'm down pretty big on this position. I bought it at some pretty bad points and some 52-week highs, but I'm very confident in the biggest bank in the United States. So one thing that we want to be looking at here is that dividend and if it will be cut. So JP Morgan, due to the industry that it's in, it needs to be able to maintain a certain level of capital. They basically have to oblige by certain regulatory restrictions, which means their dividend could be cut if it falls under that number. Now, JP Morgan was able to pay out a dividend this past quarter. As you guys can see here, $7 or 90 cents per share. Dividend actually did exceed their net income, but thanks to their $200 billion in retained earnings, they were able to pay out the dividend. So their CEO did say that during their conference call, the company could suspend dividends if unemployment was to hit over 14% and GDP were to fall 35%. And it seems like one of those is unfortunately already occurring, and I wouldn't be surprised if they do suspend the dividend next quarter. But I'm trying to look at this with a forward lens, and there's really no way that the US government would let their biggest bank fail. So even if they do suspend the dividend, I'm just going to continue to buy into it because I know that they'll be able to get through this, whether it's through a bailout or one way or another. And one day we will be past this C19. Then we have Pepsi, not much activity here. The past month, it's just up about 2%. I'm up on this position, and a great stable company with lots of different products that you find at the store. NRZ, this is one that's kind of blew up in my face, but I knew that this was a riskier play during a recession. That's the reason why I haven't sold out of it. I was basically hoping that we would stay in this bull run for a little bit longer. As you can see before, it used to pay 50 cents per share, but now that's been cut down to just 5 cents. So I will be holding on to it and just hope that they can make it through these hard times, and then hopefully they can go back to paying those ridiculous dividend yields. Then we have Shell, which recently announced that it was cutting its dividend, which is pretty unfortunate. That was actually the first time since World War II that they've cut their dividend. So I'm down huge on this position. Really at this point, just hoping that the demand for oil goes back up. A lot of these oil companies are basically on life support. Same thing with ExxonMobil when we get to it. Applied Materials, done decently here. Been trying to dollar cost average my way down with this position. This is a great provider of the materials needed for semiconductor companies to build the chips that they need for their products. Which is Nvidia here at $314. This has not went down in the last 3 months. I've been trying to find another great time to buy this company at a dip, and it looks like it fell down here to just a little under $200, and looks like that was a great time to buy this company, but then it's really just rebounded very well here. So up 28% on this position, pays a very small dividend. And then we have MasterCard here at $282.51. This is just like Visa. It might have a tough time here in the short term, just like every other company, but I'm so bullish on this company going forward. Visa and MasterCard are probably two of my favorite stocks, and I don't really see any way that they can be stopped, especially when people can still order online using credit cards or just regular cards anyway, since MasterCard doesn't actually issue any credit. And then we have Medtronic here at $99. So they make a lot of medical equipment, a lot of necessities that you would need in a hospital that you wouldn't be able to do without. So they've done very well here in the last 5 years. A lot of people don't know that Medtronic is also a dividend aristocrat, closely getting to that dividend king status. That is 42 straight years of increased dividends. So they make a lot of stuff like spinal products, insulin pumps, and I don't really see any of those going away anytime soon. So I'm just going to continue holding, might continue to dollar cost average, get my average cost a little bit lower. We have Microsoft, which has just been doing an amazing job here, even during the C19. During these tough times, their latest earnings report actually showed that their year-over-year sales had increased 15%, and then they also had a 50% revenue growth in their cloud services. So companies are really relying on Microsoft products and their software now more than ever because so many people are working from home. Plus, what are kids and young adults doing at home all day? They might be playing Xbox, which is made by Microsoft. And people really like their consoles during these times, and it's a very safe dividend play, has a great balance sheet. So I'm really happy with my returns here. I might continue to buy into positions like Microsoft that I know are not strapped for cash and will continue to do well during these tough times while other companies might struggle. This is a really solid, safe play if you need somewhere to park your money. Then we have Johnson & Johnson. Basically everything I said about being safe and parking your money. This is another generational stock that you can pass on probably to your offspring, and no worries here. They're also working on a C19 vaccine, and I think they're hoping to have that out at least in testing by September. We have Waste Management, another essential services company. Nobody really likes to think about, but a company like this you really need. I've been trying to average down here on my position, 8 shares of them. And as you can see, I've been buying them recently in March and April here. Have almost $1,000 equity in them and will continue to hold them for the long term. We have Boeing. What can I say about this company other than that their name is now just being synonymous for a company that foolishly spends money and buys back its own shares, has absolutely no accountability when their products start to fail. And I'm just going to be holding on to this down for probably a couple of years now. Boeing probably is not a stock that's going to do well here in the coming years. Then we have UNH. This is another phenomenal company. It just continues to expand its revenues. It continues to gather up that customer base. Last year they added just under 1 million new commercial customers, and they also had 300,000 new Medicare Advantage policyholders. UNH also has a supernatural 5-year dividend growth rate of 24%, and it somehow has just a 26% payout ratio. So UNH, an amazing company, 80% buy. And there was a lot of drama surrounding the stock in the past year because of the 2020 presidential election, but now I think we can all safely say that there's essentially zero chance of us moving to a single-payer healthcare system, so stocks like UNH succeed for the next 4 years. Then we have AbbVie here at $84. I'm still down a little bit on this position, but I used to be down like triple digits with this stock before, well into the hundreds, so I'm glad that it's finally recovered a little bit here. And it's also been paying out a very juicy dividend yield for quite some time now. And we just got to hope that it continues to do well even when it loses patent protection on its best-selling drug, Humira. A company that had actually offshooted off of Abbott Laboratories has been making tests that are able to test you if you have the C19 a lot quicker. Then we have Starbucks at $77.98. And one major concern that I have about all these restaurants reopening is that a lot of the rules now only allow you to have about 50% occupancy, which that really worries me because fast food restaurants and restaurants in general, they already operate under such small margins that I'm not sure if they would be able to meet their basic expenses if they're only able to cater to 50% of their capacity. Like, the restaurant was not designed with the intention of only having it half full at best at all times. So I really feel bad for all these small restaurants and mom and pop stores. I really feel like this is an unfair way. It's nothing that they did wrong, that they're going to really suffer here. And I think a lot of them are unfortunately going to have to go out of business here. And it's just a really sad situation all around. Hopefully Starbucks is able to open back up, and people might not be able to stay in the store anymore and just lounge, but they should be able to at least go in there and get their cup of coffee and move on with their life. Then we have Duke here. This is one I've also been aggressively buying, as it's another reliable company here. It provides nearly 10 million customers in various states with both electricity and natural gas. Basically, all of their business is a regulated monopoly, so they don't need to worry about customers switching to a cheaper option because, well, they are the only option. And people tend to need electricity, and that's likely going to be a bill that they're going to be paying first. They're going to prioritize that over other expenses because, everybody kind of needs electricity. Their ex-dividend date is on May 14th. So I'll finally get my first ever Duke dividend from them. I've never gotten a dividend from them before. So it's going to be pretty big to get 10 shares, 94 cents a share. So nice, almost $10 there. All right, guys, I'll try to move this along a little bit quicker. We got the Last Dance documentary coming on in a little bit, and I really want to go watch that. Also, as you guys are liking this video and subscribing to the channel, be sure to let me know in the comments, what was Elon Musk's new son's name, and what was the origin of that name? What did he give as the explanation for that? Let me know in the comments, and I will be sure to be enlightened by your post. So Coca-Cola, glad that it has rebounded a little bit. So I was able to buy this right at the bottom, right around this $40 mark, and then it looks like it's went up since then. Then we have AT&T. Actually bought another share of this on Friday, so now I own 10 shares for don't even have $300 of equity in this position, so we'll be buying more as time goes on. Then we have Prudential Financial here at $59.25. So I bought more of this on Friday as well, and I'm up almost 20% in a small amount of time. I think this is a stock that's still on a really steep discount here. It used to be trading at over $100, and then as you can see, when the economy tanked, this stock has not recovered very well. It went from almost $100 to now just at around $60. So I think it's still very undervalued, and that's why I've been buying in. Also pays a ridiculous dividend yield if it's able to maintain that. ExxonMobil hasn't been able to raise its dividend this year, but since they haven't actually cut it, and they have until the end of the year to raise it even just a penny, and they would be able to keep their dividend aristocrat status. So we'll see if that'll be interesting to see if they can continue to do that. And then real estate, this is another sector that I really wanted to talk about here. So realty income, not reality income. This is a sector that I really wanted to talk about, real estate in general. So realty income operates in 51 different industries, and about half of their tenants are investment grade, and many of them have requested rent relief. Actually, in the month of April, they were able to collect 83% of their contractual agreements rents, and that's pretty decent. Their top 4 performing industries were convenience stores, drugstores, dollar stores, and grocery stores. That makes up a little bit over 1/3 of all of their revenue, and they haven't been hit nearly as hard as other industries such as theaters and health clubs. That's where they're really losing in on that monthly rent income. So hopefully that gets resolved here soon as we slowly get back into business. But in the short term, Realty has nearly $2 billion in cash and credit available, so they may be able to eat some of these short-term hits. And it's only going to help that more and more places are slowly starting to reopen. Then we have SO Southern Company, utilities company here, up a little bit, pretty safe investment, similar concept as Duke. Pfizer, been a little bit all over the place here in the last year, down 7%. Then we have Intel. Not much has been changing with this company here. Still up on this position, about 10%. And then we have McDonald's. I would like to buy more of this company. If it went down just a little bit more, could really get that average cost down, and really want to hold on to that dividend aristocrat and just continue to buy more of those high quality stocks like them. Of General Mills at $59.76. This has performed very well during the C19. It's actually went up in the last 3 months. So all these boring companies that you don't think that there's much value in, these are the companies that are really going to be the cornerstone of what performs well during a recession, because people are still going to be buying cereal as well as all of General Mills' other food products. Then we have Store, similar situation to ticker symbol O, Realty Income. So Store operates single-tenant net lease retail properties, and they were able to collect 68% of April's rents, and they had rent deferral agreements with most of their other non-payers. It's holding on decently for now. Even if it needs to cut its dividend temporarily, I'm still going to hold on to them. I'm very confident that more places will slowly reopen, and real estate prices might be depressed right now, but I'm trying to think about this. Try to think about back in 2008, back in 2009, when people were able to buy real estate for pennies on the dollar. Think of all the millionaires that were made during that time span holding on to that land. And land is one of those assets that we can't just create more out of or just print out of thin air like we can with other assets. Wink, wink. So I will be holding on to Store for the long term, and I really think that this is a great buying opportunity and that real estate will recover. With Equinix, I recently made a video about this, so be sure to check that out. I have some really nice returns on this. Would love to own another share. Bank of America, similar situation to JP Morgan Chase, down a little bit on this position for now. Disney recently just suspended its dividend. I think most people in the community agree with me that that's not a reason to be cutting ties with Disney just because they've suspended their dividend. It's not like they had any control over the C19 situation. If people can't come to their amusement parks, if they can't be producing content, making shows, producing movies, how are they going to be able to pay that dividend? It's probably better that they were able to suspend that dividend. I'd rather have them use that money to help employees stay employed or be able to stay in business a little bit longer here. Disney, I'm sure, will be able to break through out of this little slump that they've been having. As some people in the YouTube community have been saying that dividends are a human right. I'm not so sure about that, but I think it is great that dividends are available to ordinary folks like you or me, and that we're able to profit off of corporations such as Disney, being able to be part owners in such a large company, just a little under $550 worth of equity. So that Last Dance documentary is actually airing on ESPN, and ESPN is partly owned by Disney. So I'm actually really shocked that ESPN has been able to operate every day for 2 months without any sports, yet they still have people talking every single day. I'm not sure what they're talking about, but I think that in itself is very impressive. Then we have 3M at $148. Recently bought another share of them, and I know they're busy making those N95 masks. And then we have the railroad stocks in CSX and Union Pacific. So this is another one I've been wanting to buy more shares of. And then Medical Properties Trust recently bought a whole bunch more of these shares. And that last stimulus package that was passed, a lot of these hospitals, they got money to be able to pay their bills. So hopefully they're able to cover their rent expenses. And Medical Properties Trust also does a lot of international business. Hospitals such as those in Europe, those follow more socialist policies, so they get a little bit of benefit and a little bit more help from the government. It's a bit more government owned, so they get assistance from the government in order to pay their bills. So I wouldn't be worried as much about those hospitals as I am about those in the United States. Then we got Verizon at $57.02, and then I also own 3 shares of Chubb. And then to round it all out, we have 6 shares of SPHD, a monthly paying Dividend ETF. So that's going to do it for the portfolio, guys. I know this is a long video. I too tend to ramble, and but if you guys like this content, please be sure to hit that like button and subscribe to the channel. I try to put these portfolio update videos out at least once a month. And let me know if there's other content that you guys want me to put out. I'm always looking for suggestions and feedback. So be sure to let me know, and I'll catch you guys next time.